I'm staring at the Cardano chart as it free falls, and my heart should be pounding. ADA crashed from about 80 cent to barely 33 cent in a single day. Whales dumped hundreds of millions of ADA in a frenzy. Panic is in the air. Reddit is on fire, Twitter's full of doom posts, and some long-time holders are rage quitting. So why am I calmly sitting here still holding every last ADA I own? Am I crazy, or do I know something the panic sellers don't? Today, I want to tell you a personal story about why I'm not selling my Cardano even as the market goes wild around me. Trust me, you'll want to hear this, especially if you felt that knot in your stomach watching your portfolio dive. Let's rewind to what might have been the toughest week of the year for Cardano. One moment, ADA was approaching the 80 cent mark with bullish optimism in early October. The next moment, bam! A flash crash on October 10th sends it plummeting to 33 cents. It was like watching a trapdoor open under the price. It did rebound to around the 60 cent range within hours, giving a bit of relief. But the roller coaster wasn't over. November rolls around and the pressure starts again. Slowly, steadily, the price drifts down. By December 1st, ADA slid all the way to about 37 cents. We basically round-tripped all of 2025's gains. Ouch. Now, I'm human. Seeing one of my favorite assets get hammered like that is painful. I won't lie. There was that little voice in my head whispering, should we bail? Cut losses? Is this the end for Cardano? If you've been in crypto for a while, you know that voice. It's the sound of fear and doubt, and it hits hardest when the charts are bloody. And boy, were they bloody red. Some people did panic. In fact, a lot of people panicked. I watched it happen in real time. Friends texting me if they should sell, folks on our Discord server freaking out, you name it. Even some big players were heading for the exits. On-chain data showed that whales, the big ADA holders, sold about 100 million ADA in just 72 hours around that crash. Imagine seeing $65 million plus of ADA dumped in 3 days. It's hard not to feel nervous when you see whales apparently saying, nope, we're out. And it didn't stop there. By mid-November, the total whale sell-off ballooned to 440 million ADA offloaded in a month. That's nearly $500 million ADA gone from whale wallets. With all that selling, you'd think nobody in their right mind would still be holding, right? It's like seeing the smartest kids in class stand up and walk out of the exam. Would you stay seated? Well, I stayed. I not only kept my seat, I doubled down in my conviction. I didn't sell a single ADA. And guess what? I'm not alone in holding strong. Another prominent crypto YouTuber, Austin Hilton, said recently that he hasn't sold any of his ADA either. Hearing that from someone else was reassuring. It's like getting a nod from a friend across the chaos, saying, we got this. But even if nobody else was saying it, I'd still be here, refusing to hit that sell button. Why? Because I fundamentally believe in what I invested in. I believe in Cardano's vision, and more importantly, I believe in Charles Hoskinson, the man behind Cardano's curtain. This might shock you, but I'm not a financial advisor, and nothing in this video is financial advice. Cryptocurrencies are highly volatile, and you could lose all the money you invest. Always do your own research and consult a qualified professional. Your investments are entirely your responsibility, and you should know that nothing is ever guaranteed when it comes to investing. Neither I, this channel, nor YouTube are liable for any losses. This video is for entertainment and educational purposes only. So let's talk about conviction versus panic selling. Why am I holding ADA when others are running for the hills? For me, it boils down to understanding and trust. I've done my research on Cardano over the years. I didn't buy ADA on a whim or because it was the hot token of the month. I bought in because of the philosophy and tech behind it, the methodical development, the peer reviewed research, the idea of building a blockchain that could scale and serve millions in a decentralized way. And yes, because of Charles Hoskinson's leadership, this is a guy who co founded Ethereum, then set out to create something even better. He has a long term vision for Cardano that resonates with me. When I listen to Charles speak about where Cardano is heading, I don't hear hype, I hear a plan, a long game plan. Just recently, Charles outlined some really ambitious goals for Cardano's future that keep me optimistic. He talked about uniting multiple Cardano based projects, kind of bringing the whole ecosystem together, potentially through this upcoming Midnight network. If you haven't heard of it, Midnight is a privacy focused sidechain that's in the works. Charles has hinted that 2026 is going to be a pivotal year for all this. They're aiming to roll out Laos, which is a big scaling solution, and actually launch the Midnight mainnet. On top of that, Cardano's DeFi ecosystem is set to get a lot stronger over the next year. In short, the development pipeline is stacked. There's real stuff coming, not just promises. Here's a kicker: Hoskinson's ultimate goal is to position Cardano as the world's leading cryptocurrency, numero uno. Yeah, he wants ADA to eventually dethrone Bitcoin. Now, that sounds almost crazy given where we are today. Bitcoin's market cap is like $1.8 trillion with a T at the top. ADA's sitting around a $15 billion market cap at the moment. The gap is enormous. It's the equivalent of a rowboat chasing a battleship in terms of size difference. I'm not going to sugarcoat that. But you know what? That audacious goal tells me a lot about the mindset behind Cardano's development. They're not here to be just another altcoin. They're aiming for the throne, even if it takes a decade or more. And as an ADA holder, I kind of love that audacity. It's inspiring. It reminds me of a scrappy underdog team aiming for the championship. Sure, most people think they'll never beat the reigning champs, but the team believes they can. Sometimes in tech and in crypto, the underdogs do win, or at least they change the game so much that everyone has to acknowledge them. Now let's get practical for a second. Belief and vision are great, but what about, the reality of holding an asset that's down 50% plus from recent highs? How do I cope with watching that kind of volatility and not lose my mind? The answer is I prepare and I take action in ways that reinforce my conviction rather than my fear. One thing I do is make sure my ADA is working for me while I hold. I'm not just clutching my ADA under a mattress. I actually run a Cardano stake pool. You might know it if you've been around the channel. It's the cheeky crypto stake pool with the ticker CHEEK. Staking is a big part of Cardano's network, and it's a great way to make your ADA work harder for you instead of just sitting idle waiting for the price to moon. By staking, I earn rewards paid in ADA for helping secure the network. It's like earning interest on your crypto, and it adds up over time. If you're holding ADA and not staking it, you might want to consider it. Your ADA isn't locked up. You remain in full control and can move it anytime. It's basically liquid staking by design. If you haven't staked your ADA yet, maybe check out our stake pool. And hey, if you're already staking with someone else but want to support what we do here on the channel, you can move over to our stake pool. Every delegator helps, and it truly supports us in making these videos possible. Plus, you'll be earning passive ADA rewards. It's a win-win. Beyond that, I have a strategy for dealing with exchanges and the unpredictable nature of crypto platforms. Here's a hard truth. Sometimes exchanges go down or get into trouble. We've seen it happen. They pause withdrawals, get hacked, or even go bankrupt out of nowhere. I never want to be in a situation where I need to sell or move funds, and I'm stuck because my exchange of choice is down for maintenance. So I sign up KYC and test as many exchanges as I reasonably can. I call it my plan A, plan B, plan C approach. If exchange A suddenly freezes, I know I've got B and C ready to go. This saved my bacon during the FTX collapse and other exchange glitches in the past. Now I've got affiliate links for all the exchanges I use on my website. Link in the description. Each of those is an affiliate link that supports the channel, by the way. So if you do need to open a new account, using those links is a free way to help out this channel. They're all reputable platforms I've tried myself, and they're clearly marked as affiliate links so you know. The bottom line is, don't put all your eggs in one exchange basket. Have backups, be prepared. It's not paranoia, it's smart planning in crypto land. Of course, the safest place for your crypto, especially the portion you're holding long term, is not on an exchange at all. It's in your own custody. I can't stress this enough. Not your keys, not your coins. If a major exchange implodes or gets hacked, you don't want your life savings sitting there. That's why I keep my ADA and other coins in a hardware wallet whenever possible. Personally, I use ledger devices to secure my assets. It gives me peace of mind that no one can just hack a website and drain my funds. If you're serious about crypto, I highly recommend getting a hardware wallet. Now, one important tip: only buy your hardware wallet directly from the manufacturer. Don't go ordering one from some random seller on eBay or a third party on Amazon, because there are fake devices out there that can compromise your security. Get it straight from the source. I have a link direct to Ledger on my website in the description for anyone interested. Yes, that's an affiliate link too, which means if you purchase through it, it supports the channel, and I truly appreciate that. But it costs you nothing extra. The key point is secure your crypto. Whether you use my link or not, just make sure you're protected. Crypto is awesome, but it comes with responsibility. You are your own bank, so act like one and protect your vault. By now, you might be thinking, okay, you've got conviction, you stake, you spread out exchanges, you self custody. But what if you're just wrong about Cardano? What if all this belief is misplaced? It's a fair question. I ask myself that too, honestly. What if I'm wrong? In investing, nothing is guaranteed, and you have to be open to the possibility that your thesis might not play out. I acknowledge that Cardano has its critics. Some say development is too slow, or that it's all talk, or that other chains will outpace it. I keep an eye on those perspectives because it's important not to live in an echo chamber. But after weighing everything, I still like my odds holding ADA. I've seen Cardano's progress. I've seen the community, which is one of the most robust and positive communities in crypto. And I've seen how Charles and team handle challenges, usually with a long-term fix in mind rather than a quick patch. That gives me confidence that even if ADA is undervalued or underutilized today, it could shine when the market values fundamentals again. And if I'm wrong, well, I'm managing my risk. I haven't bet money I can't afford to lose. That's another crucial part. Never invest more than you can afford to lose. It's cliche, but it's true. It's a lot easier to hold through volatility if you're not worried about next month's rent being tied up in ADA or any crypto. Another factor keeping me sane during this wild ride is education. I constantly try to learn more about the market and how to navigate it. In fact, this passion for education is why I started Cheeky Crypto School at cheekyschool.com. It's my online crypto school where we have courses on trading, portfolio management, risk management, all that good stuff. If you feel a bit lost during these turbulent times, consider educating yourself, whether through our resources or others. Knowledge is the antidote to panic. The more you know, the more you can separate noise from real signals. And to make it easier, we've got a discount code YT50OFF that gives you 50% off any course just for the YouTube community. The link and details are in the description. We created these courses so that everyday investors can gain the skills to not panic sell at the worst times and to have a strategy instead. If it helps even a few of you avoid costly mistakes, it's totally worth it. Also, a quick shout, if you haven't already, join iFree Discord, link in the description. It's a community of like-minded crypto enthusiasts. During that big ADA crash, our Discord was buzzing, but it wasn't just people screaming, "Fire, sell everything." A lot of us were sharing research, historical charts, reminding each other why we believe in projects like Cardano, and yes, even making a few memes to lighten the mood. It's so much easier to maintain conviction when you're surrounded by others who have done their homework and stick to their principles. So don't isolate yourself if you're worried. Jump into a community, ours or any good one, and you'll see you're not alone in this journey. We're all learning and growing together in real time as crypto evolves. Now, I want to share something a bit different that I've been experimenting with. Another way I'm planning to earn crypto passively and diversify my income streams. You might have heard me mention Unity nodes in previous videos. This is a new project that's been making some waves, founded by World Mobile and Minutes Network. Think of it as this cool mashup of telecom and blockchain. Basically, Unity lets you turn your everyday smartphone into a mini node that helps power a global telecom network, and you get paid for it. It's like mining, but instead of crunching meaningless hashes, your phone is doing useful telecom tasks, like verifying signals, preventing network fraud, stuff like that, and you earn crypto rewards in return. I found the concept super interesting. It caught my attention as a way to put some unused devices to work. So I went ahead and purchased a Unity node license. This license, which is basically a software license, not just some collectible, comes with the ability to connect up to 200 phones to the network. No, I'm not hooking up 200 phones in my house. At least not yet. That would be a sight. I'm starting with a small test, about 10 phones to begin with, just to see how it all works and what kind of rewards it generates. If it's successful and worthwhile, I'll consider scaling up gradually. What I really like is that the rewards you earn can be paid out in various cryptos. I've set mine to pay me in BTC, ETH, ADA, and XRP, a mix of some top assets I believe in. Over time, this could be a nice way to stack more crypto passively while contributing to a network that actually does something in the real world, telecom services. It's not hype, it's a real utility project, which is refreshing. Now, I want to be clear, I'm not telling everyone to run out and buy a Unity node license. It's a $5,000 investment per license, and it's a pretty new concept, so do your own research on this big time. I'll put a link in the description to their light paper and the reward calculator so you can read about it if you're curious. The concept might not be brand new to you if you've watched my channel for a while. I've talked about Unity in past videos, but it's still early days. I'll keep you posted on how my Unity node experiment goes. If it ends up being a flop, I'll tell you that. If it ends up being awesome, I'll definitely tell you that too. I just think it's a fascinating approach to decentralized infrastructure. And hey, if it works, it's another plan B for passive income in the crypto space. And being diversified in how you earn crypto is as important as diversifying what crypto you hold, in my opinion. At this point, you can see a pattern in how I'm navigating this turbulent market. I'm staying informed, I'm staying engaged with the community, I'm using every tool at my disposal, whether that's staking, hardware wallets, multiple exchanges, or new things like Unity, to strengthen my position. And I'm keeping my eyes on the long term. Cardano's story isn't about what the price will be next week or even next month. It's about what this platform could mean for the world in the next 5, 10, 20 years. I know that sounds grandiose, but remember, early Bitcoin holders sat through stomach churning drops because they had conviction in a big idea. Early Ethereum believers did the same. Many of them were laughed at or told they were nuts for holding on. But they're the ones laughing now, or rather quietly smiling on a beach somewhere. I'm not saying ADA is guaranteed to do the same. Nothing is guaranteed, but I see that potential, and I'm willing to hold and find out rather than bail and regret later. One more thing to keep in mind: when whales unload huge amounts of crypto, it doesn't just move the charts, it messes with people's emotions. Retail investors, folks like us who don't have a $1 billion buffer, see those red candles and panic. I've been there. You see the market tanking, your heart starts racing, and you convince yourself that getting out just in case is the smart move. But the pattern is almost predictable. Retail sells low out of fear, and then the same whales or other big players circle back and scoop up those same coins at a discount once the chaos settles. It's the oldest story in crypto. The impatient end up handing their bags to the patient. I've been on the wrong side of that cycle more than once. I've sold in fear, felt a weird mix of relief and regret, and then watched the price recover without me. That sinking feeling in your stomach, that's the cost of emotional decision making. And I promised myself I wouldn't repeat that mistake with Cardano. If something was fundamentally broken, like if the dev team abandoned the project, the tech stalled, or the roadmap fell apart, I'd reassess and probably cut my losses. But that's not what's happening with ADA. The fundamentals haven't collapsed. If anything, they've strengthened. Cardano keeps shipping improvements. The Mithril upgrade rolled out smoothly. Dev tools are getting better, and more projects are building on the chain. Community participation is climbing, governance is evolving, and the research-first approach that's always defined Cardano is still guiding it forward. A drop in price doesn't erase any of that. It's just noise. Loud noise, sure, stressful noise, but still noise. The real signal is in what's being built, what milestones are coming up, and what kind of real-world use cases are taking shape. And on those fronts, Cardano hasn't slowed down. If anything, the momentum Charles talks about, the broad, steady push behind the ecosystem, has become more visible. Price lags progress sometimes. It's frustrating, but it's part of the journey. As I wrap this up, here's the core lesson I've taken from all of this. Conviction isn't the same as blind loyalty. It's not about clinging to something no matter what. It's about having clear reasons for why you invested and sticking with those reasons until they're proven wrong. My conviction in Cardano comes from its mission: building a more secure, more scalable, more inclusive blockchain network. I see a project that values research, that keeps improving, and that's preparing for major upgrades ahead, whether it's the scaling advancements coming in 2026, the midnight rollout, or the steady expansion of DeFi in the ecosystem. There's real work happening behind the scenes in labs, in hackathons, in developer communities around the world. Could I be wrong? Of course. Nobody gets every bet right in crypto, but if I am right, the last place I want to be is sitting on the sidelines because I let fear push me out. To everyone out there holding ADA through the turbulence, you're not imagining things. It really is hard. Volatility tests you in ways textbooks never could, but you're not alone, and you're not irrational for holding. If you've done your research and your thesis still stands, and if you did panic sell, don't beat yourself up. Seriously, every investor has a story about the one time they let emotions win. The important part is learning from it. Maybe that means diversifying more. Maybe it means setting rules for yourself. Maybe it means deciding which projects you're willing to hold through ugly dips. Whatever it is, let the lesson shape you, not discourage you. And if you're new to Cardano or crypto in general, Take this as a friendly warning. Volatility isn't a bug, it's a feature of early stage innovation. The swings scare people out of positions they might later wish they kept, and those same swings give patient folks a chance to accumulate. That cycle's been repeating since Bitcoin was worth pennies. At the end of the day, I'm holding my ADA because my belief in Cardano's long term path outweighs the fear that comes from temporary drops. Conviction over panic, that's what I'm choosing. It might not be the loudest opinion in a market filled with doom posts and crisis takes, but it's mine, and I wanted to share it openly from one investor to another. If you feel the same way, awesome. We probably see the world similarly, and if you don't, that's fine too. You've got to make choices that match your own goals and comfort level. Thanks for sticking with me through this story and this perspective. If this gave you some clarity, comfort, or even just something to think about, I'd appreciate it if you hit that subscribe button, join the community. We've got more real talk, breakdowns, and deep dives coming. And hey, check out the next video that's about to pop up. I'm pretty sure it will grab your interest. Until next time, stay crypto savvy and stay cheeky.